A few years ago, I thought that owning multiple properties was only possible if you had a lot of money. But quickly I learned that you don't have to be rich. You just need to know how to leverage money. And that's where bridging finance comes into play. Bridging finance allowed me to buy properties quickly, turn them into high value investments without waiting years for me to save up a lot of money. In this video, I share with you what bridging loans are, how they work, how you can buy properties using bridging finance, and what they cost. I'll also share with you some real examples of my own projects so you can see how this works in practice. Hey, I'm Daniil, and behind the scenes is my wife Greta, and together we're the Vnoutchkovs. This year, we set the challenge for ourselves to buy 3 large properties, renovate them, and rent them out while documenting the whole journey. We are here to show you the reality of property investment. Alright, so what is a bridging loan? A bridging loan is a quick access, short-term loan that helps you to buy a property where you need cash fast. It's called a bridging loan because it bridges that gap until you can pay it off in another way, like through long-term mortgage or when you sell the property. Bridging loans come with high interest rates, typically anywhere between 10 to 20%, which can sound intense, but the idea here is not to keep the loan for years. Bridging loans are more about fast access to money that you wouldn't get from a traditional mortgage. But the big advantage is the flexibility and the speed to access cash that you normally wouldn't get otherwise. Does that mean that you'll be paying a lot of interest? Not really, because the aim is to have the bridging loan for a short period of time. So let's say you buy the property for 100,000, you put 50,000 in renovation, and then increase the value of the property to 200,000. You then refinance the property to pay off the bridging loan. You can use bridging loans for all sorts of things, like when you want to buy a property at auction where you need cash fast, buying properties that need a lot of renovations and that typically wouldn't get a normal mortgage on, large-scale conversions like HMOs, or commercial properties. You can get a bridging loan from 50,000 up to a few millions. But there's always one big question that the lender wants you to answer. How are you going to repay them? Is this going to be through a refinance, or are you going to sell the property, for example? For example, when you buy a property at auction, you typically need the money anywhere between 28 to 56 days, which is much faster than a traditional mortgage can provide you money with. That's where a bridging loan really steps in. It's like a little shortcut to access money fast. When you take out a bridging loan, it's usually secured against the property. So if you're buying a property using bridging finance, the lender takes first charge on the property, which means that if he cannot pay off the loan, the lender will recover the money by selling the property. And then you can borrow the money anywhere from 1 month up to 2 years. You might ask yourself, why not use a regular mortgage instead? Well, the biggest reasons are the flexibility and the speed. With the bridging loan, you can move on a deal very fast. When you're presenting an offer, you can even present as a cash offer because bridging loans are so fast, and that's what sellers really love. Bridging loans are great for when you need the money for a short period of time, or when you would like to do a renovation to increase the value of a property before moving it to a long-term mortgage. You can borrow money quickly, make the improvements to the property, and then either refinance the property or sell it once the value is up. But with a traditional mortgage, it's usually locked in for a few years, which does not give you the same flexibility as a bridging loan does. Now, let me break down how the bridging loan actually works. Firstly, you take the bridging loan for a short period of time, usually anywhere between 6 months to 18 months. Then you'll have to pay monthly interest fees, which is usually anywhere between 0.8% to 1.5% per month. And then finally, it's secured against the property itself. So if you can't repay the loan, the lender will take the property. One nice thing is that you only pay interest for the amount of time that you had the loan for. So let's say you borrow 100,000 with 1% interest and you only borrow it for 6 months, you'll only be paying it for 6 months long and not 12 months. Now let's talk about the cost, because a bridging loan has got a lot of different costs involved in it, and they can add up quickly. Here are the main costs involved. The first one is the interest. Typically it's anywhere between 0.8% to 1.5%. And if you borrow the money for 6 months, you only pay for that period. Then you have the arrangement fees, which is usually anywhere between 1 to 2% of the loan amount. And these costs have to be paid upfront. Then you have the exit fees. So sometimes if you want to exit the product earlier, you have to pay an exit fees. Then you have the valuation and the legal fees. The lender wants to know what the values of the property before and after the completion of the renovation. And also you have to pay for the solicitor of the lender's side. And this is something that you have to cover. Then you have the bridge and broker fees. Some of the bridge and brokers, they charge you a fee up front to find you the best possible deal. And some of them, they don't charge you anything, but they get a commission from the lender side. When I first started off with bridging loans, all these fees felt like quite a lot to me. But then I quickly realized there's something that you just have to pay in order to get access to money that you otherwise wouldn't have. And yes, you'll have to cover the lender's legal fees. It's just part of it. Different lenders also have different fees. One lender might charge you £100 for title insurance, while the other one might charge you £300. It's just something that you have to accept. So for example, let's say you want to borrow £100,000 with a 1% interest charge per month, and you want to borrow it for 6 months long. That'll be £6,000 just on interest charges alone. Then you have the other fees that come on top of it. So let's say your grand total will be £8,000. This is very important to keep those costs in mind because they can quickly add up. So here's an example of a bridging loan that I have. As you can see, the loan that I've got is with Vnoutchkovs. And the loan is for £191,250. I've got the loan for 12 months at an interest rate of 0.89%, and then 0.89% of the loan amount is £1,702.13. So when you multiply that by 12 months, it comes to a total of £20,425.56 in interest charges alone. But we're hoping to repay this loan much sooner than that, so we should get a portion of it back. Then you can see that the minimum interest charge is £5,106.39. If you divide this number by the monthly interest charge of £1,702.13, then that comes to 3, which means that the lender will only borrow you money for a minimum of 3 months, because otherwise it's not worth that time. Then you can see all the other fees that you have to pay. The first one is the arrangement fee, which is £3,825, and that's 2% of the gross loan amount. Then you have the smaller fees, like the title insurance fees of £250, you have the funds release fee of £25, and the title insurance of £201.60. Then they deduct all these fees plus the 12-month interest charge from the gross loan amount, and that gives you a total net loan of £166,522.84. And this is the money that we actually received on the bank account. So as you can see, there's quite a few fees that you have to consider. And some of the lenders like Vnoutchkovs, they deduct the interest charge up front. So it's very important to keep these numbers in mind when you're doing your calculations. When you borrow money from the bridging lender, they want to know how you're going to repay them back. So is this going to be through a refinance, or are you going to sell the property? They also want to know what the plan B is, in case plan A doesn't work out. There are 2 main exit strategies. The first one is selling the property. If you're flipping a house, you repay the lender back when you sell the property. Or you can use refinance, for example. If you're planning to keep the property to rent it out, you increase the value of the property after the renovation, then you put it on a long-term mortgage, and with that money of the long-term mortgage, you repay the bridging lender. For me, I went for the refinance strategy, and this is how it works. After the renovation is completed, you get the value to come over to check the new value of the property. Then you apply for a mortgage, which is typically around 75% of the new value. This then pays off the bridging loan, and if there's any money left from the mortgage, then this goes into your account. So let me demonstrate you how it can work. And I kept these numbers very simple just to show you an example. So let's say you buy a house for $100,000. You have to pay 25% deposit, which is $25,000, and then the remaining 75%, you get a bridging loan on it, which is $75,000. You spend then about £50,000 on the renovation, and once the renovation is completed, you go to the mortgage broker to find you the best buy-to-let mortgage on the market. The lender then sends over a value to the property, and the new value of the property is, let's say, $200,000. Then you get a 75% loan-to-value mortgage, and 75% of that $200,000 is $150,000. You then use the £150,000 to pay off the bridging lender who lent you £75,000 to purchase the property. The rest of the money you pay off for the renovation and the initial deposit that you put into the property. Again, it's a very simplified example, but you have to keep in mind all the extra costs that come into play. But it just shows you how you can use the bridging loan in your advantage. When I applied for my first bridging loan, I went in thinking it would be pretty straightforward to get the first loan. However, it was more stressful than I expected it to be, and it also took more time. But looking back at it, it's your first bridging loan, so you have to expect it to take a bit more time, and you have to jump through a few hoops to get that loan. When taking out the bridging loan, the lender is going to do a deep dive in your background. They want to know everything about you. So for example, they want to know where's the deposit coming from, how much experience do you have in similar kind of jobs, and what is your exit strategy. And because you're the first time borrower, they want to know all of the finer details. I remember that for my first bridging loan, they even asked for a second charge on our residential property. They also increased the interest rate on the loan that we took. But Because they offered us a loan does not mean that you have to go with it. So in the end, we decided to look around further and find a better suitable loan for us. Then, depending on the broker and the solicitor you have, it can define the speed of the process. So it's very important to have the right team in place to make sure that goes smooth and fast. But it also depends on yourself. So if it takes you a few days to respond to the queries from the solicitor, then obviously you will slow down the process yourself. But make sure that you also follow up with the solicitor to make sure that everything goes according to plan and everything goes smooth. Also, don't be afraid to ask the bridging broker questions. In the end, they're here to help you. I remember for the first bridging loan, I was asking so many questions and I just want to know where I stand in the process. In the end, they want to make sure that you get the bridging loan because if you don't get it, they don't get paid for that commission. And you don't interact with the bridging lender. Everything goes through the bridging broker. I actually learned a lot from my bridging broker. They were hand-holding me through the process and also giving me daily updates. Also, you can find multiple brokers to find you the best deal. Some of the brokers, they don't like that and they want you to sign an exclusivity agreement. Some of them, they don't mind you to shop around. In the end, it's business and you just want to find the best deal that's suitable for you. But don't worry, the first bridging loan might take a bit more time and can be overwhelming. But in the end, with the right team in place, everything is doable. So just take a step at a time and before you know it, you'll have your bridging loan. That's the basics of bridging finance. I hope this made things clear for you and also helped you understand how bridging finance can help you with property investment. It's a very powerful tool, but you have to have a solid plan in place. We actually just purchased a property at auction using bridging finance. And if you want to see what we purchased, check out this video here. If you find this video helpful, please hit that like button, subscribe for more property updates, and if you've got any questions, leave that in the comments below. Thanks so much for watching, and I'll see you in the next one.